Welcome to Concept Craft. We are presenting step-by-step videos training to crack your certification exam, so you can gain the confidence to take on any accounting challenge. Now let's begin our today's lesson. Reviewing lists at period end. Learning outcomes. In this lesson, we'll cover reviewing and troubleshooting QuickBooks Online lists. Topics. When should you review a client's lists? Reviewing the chart of accounts. More account troubleshooting. Reviewing the products and services list. Reviewing the customers and vendors lists. Putting things right. Clients sometimes make errors when they set up or map their lists. These mistakes can have a significant effect on the client's company file. However, you might not notice them until period end, when you review your client's vendors, customers, products and services, and chart of accounts lists. It's usually only then that you can identify and fix these errors. How can you and QuickBooks Online help? QuickBooks Online can help you identify and troubleshoot errors with lists, whether these involve simple changes, such as cleaning up the list, or more serious issues. In this lesson, we'll review the most common issues with lists and learn how to resolve them. When should you review a client's lists? You should always review your client's lists at the end of the fiscal year. However, some businesses may need to be reviewed more often, so make sure you discuss the frequency with clients to agree on a schedule. You may want to review the list of clients new to QuickBooks Online more often and teach them best practices when you see a problem. One of the key lists to check is the client's chart of accounts. Read on to find out more. Reviewing the chart of accounts. Start your review by looking at the client's chart of accounts to see if each account on the list makes sense for that particular client. Run through the following questions. Is the chart of accounts too detailed? Not detailed enough? If the client doesn't subscribe to QuickBooks Online Advanced, are they approaching their limit of 250 accounts? Are there duplicates? Are the account types correct? Is the client using subaccounts effectively? Select each question below to find out more. How do I find and correct common errors? In most cases, you need to review the chart of accounts and look at the balance sheet and profit and loss reports. Review the chart of accounts. Start by looking at the account type compared to the name of the account. For example, is an account called Chase Credit Card set up as a bank account instead of a credit card type of account? This would show up in the wrong section of the financial statement and have a negative balance. Also, the numbers wouldn't look right when reconciling the account. Another common error is when clients create an expense account directly related to what they're selling but set it up as an expense type rather than a cost of goods sold type. If so, the gross profit won't be correct. If the account type is incorrect, edit the account and change the type. Review the balance sheet and profit and loss reports. Look for large and unusual balances. For example, a large balance in an account called miscellaneous may indicate that you need to add additional accounts to more clearly define those types of expenses. Or you might find that the client created an expense account called American Express and posted all credit card purchases there rather than using QuickBooks Online's built-in credit card feature. Review the audit log. You can also use the audit log to filter and search for changes to lists and look for changes made to accounts since the last review. What if there are too many accounts? If the chart of accounts is too detailed or contains duplicates, you can merge accounts or make some inactive. How do I merge accounts? You can merge accounts that contain duplicate activity, office expense and office supplies, for example. This combines the activity into one account and makes the other one inactive. Keep in mind that merging accounts is not reversible, and that merging may change prior year information. To merge accounts, make sure both accounts are the same account type and detail type. Edit the account you want to keep, copy the name, then close the account. Edit the account you don't want to keep and paste the name. When done, select Save and then Yes to confirm that you want to merge the two accounts. To find out more, read this article on merging duplicate accounts. Note that you must make sure that any subaccounts are associated with the same parent. If you're merging two parent accounts, you must make sure they don't have any subaccounts. Accounts connected to online banking can't be merged. How do I make an account inactive? You may want to make accounts inactive if your client reaches the usage limit of 250 accounts, if they don't have a QuickBooks Online Advanced subscription. You should also make inactive any accounts that won't be used anymore, such as a loan that has been paid off. The more streamlined the chart of accounts, the less room for error when posting transactions. To make an account inactive, find it in the chart of accounts and select Make Inactive from the action drop-down, as shown below. Note that this option may say, Make Inactive reduces usage, or Make Inactive won't reduce usage. This relates to the 250 account limit in QuickBooks Online Simple Start, Essentials, or Plus. Keep in mind that when you make an account inactive, QuickBooks Online hides the account from lists and drop-down menus. However, it does keep a record of past transactions. If you run a transaction-based report and there are transactions in that account during that period, the account will show up with the word deleted appended to the end of the name. If you try to make a balance sheet account that has a balance inactive, QuickBooks Online gives you an error message as follows. If you continue deactivating the account, QuickBooks Online creates a journal entry to zero it out and post it to opening balance equity. This entry is dated the day you made the account inactive. That's why it's best to reclassify the balance to the accounts of your choice and on the date of your choice before making the account inactive. How can you see inactive accounts? Select the grid gear icon at the top right of the chart of accounts screen and select the Include Inactive checkbox to see the inactive accounts. More account troubleshooting. You need to take additional steps before deleting certain account types. Here are a few examples. If an account you want to make inactive is used in an active product or service. In this case, you need to edit the product or service and change the mapping of the account it's connected to. To find out more, read this article on changing the account for a product/service item. Alternatively, you can make the products and services that use the account inactive. If an income account you want to delete has pending billable charges, your client should invoice their customers for the billable expenses, time, or delayed charges. Find out more in this Enter Billable Expense article. Alternatively, go back to the billable expense or time transactions and remove the billable status. Also, delete any delayed charges that won't be invoiced. Once you're done, you can make the account inactive. What if the account has subaccounts? If you inactivate an account that has active subaccounts, you'll inactivate all the subaccounts. Reactivating an account with subaccounts will only reactivate the parent account. The subaccounts will have to be reactivated individually. Reviewing the products and services list. You also need to review the products and services list to identify any issues. Select the headings to find out more. What can cause issues in the products and services list? There are two issues you'll often encounter in the products and services list. The product or service is not mapped to the correct account. One example is a service item set up as a double-sided item, and both sides post to a service income account. In this case, reports are going to have errors. The product or service is not set up as a two-sided or double-sided item, meaning that it can't be used on both sales and purchase forms. How do you review the mapping? To review the account mapping, perform the following steps. On the products and services list, select the grid gear icon. Make sure the income, expense, and inventory accounts are selected. With all accounts displayed, check that all items are properly coded to the correct accounts, and edit the items as necessary. What will happen to historical transactions if you change the account associated with an item? If you change any of the three accounts for an inventory item, QuickBooks Online will automatically change historical transactions. This may affect prior period numbers. If you change the income or expense account associated with a non-inventory or service type item, QuickBooks Online adds a checkbox to also update this account in historical transactions. If you don't check the box, QuickBooks Online will use the account from this time forward. It doesn't change postings of prior transactions. Either way, when you select Save and Close, if this change affects any historical transactions dated on or before the current closing date, you will be prompted to select Save again to make this change. What about double-sided items? If your client wants to do job costing or see item profitability, you should set up the products and services as double-sided or two-sided items. This means that you can use the item on both sales and purchase forms. This only applies to service and non-inventory items, because, by definition, inventory items have to have three accounts assigned to them. An income account, an asset account, a cost of goods sold account. The two boxes that need to be checked in the item setup are I sell this product/service to my customers. You'll then assign an income account that will be used on sales forms. I purchased this product/service from a vendor. You'll then assign an expense account that will be used on purchase forms. You also need to make sure that the setting to show items table on expense and purchase forms is enabled in the Expenses tab of Account and Settings. Reviewing the customers and vendors lists. You should also look for issues and workflow errors in the customers and vendors lists. Select the headings to find out more. Are there any duplicate entries? First, identify any duplicate customers or vendors and merge them. Duplicates might arise due to incorrect spelling or punctuation, or when different customer display name as choices are used for the same customer/vendor. If there is a first and last name and a business name, you can specify the customer display name as field as the company name, or as the individual's name with either last name first or first name first. How do you identify any duplicates in the customers and vendors list? You can run a customer/vendor contact list report grouped by billing zip, or shipping zip if applicable. You might want to go over the list with your client because they are more likely to spot duplicates. How do you merge any duplicates? To merge names, change the customer display name as field on the customer/vendor you don't want to keep to the display name on the customer/vendor you do want to keep. QuickBooks Online will recognize that there is another customer/vendor with the same name and ask if you want to merge them. Select yes and all transactions will be moved to the remaining name. However, because QuickBooks Online never deletes list entries, the old name will still be there and it'll be inactive. Are there any customers/vendors that are no longer needed? When reviewing the customers and vendors list with your client, ask them to identify any customers/vendors they no longer do business with. If your client tracks job profitability by sub-customers, have them identify any completed jobs that are no longer needed in the customers list. Then make those customers or sub-customers inactive by selecting Make Inactive from the options in the Action column next to the customer. Or if you have a batch that you need to make inactive, check each customer or sub-customer in the customers list and, under Batch Actions, select Make Inactive. Are there any errors with how transactions have been applied to sub-customers? Note that this section only applies to customers, because there are no sub-vendors in QuickBooks Online. You may also see issues related to payments for sub-customers being applied incorrectly. When setting up a sub-customer, you have the option to bill this customer or bill parent customer. When the client uses bill parent customer, it would be easy for them to receive payment using the parent customer name and apply the payment against the wrong sub-customer. How do you find any unapplied payments? To quickly find unapplied payments for a customer, open the customer transaction list page and filter for money received, then select the status column. You may have to select the grid gear icon to display the status column first, to add the status column. Any open payments will be listed at the top. Note that, in this example, there are none. How do you fix any errors? To fix any errors, select the open payment and change the name to the correct sub-customer. However, before you correct the sub-customer name, make sure that you write down the amount received first. This is because QuickBooks Online will zero out the amount. You'll then need to re-enter the amount received on the screen for the correct sub-customer. What will happen if you make a customer or vendor inactive, and they have an open balance? If you inactivate a customer who has an open balance, QuickBooks Online will create a credit memo using a services item that it sets up. This services item posts against the services income account, which QuickBooks Online also sets up. What if there are outstanding invoices for this customer? You should write off customer invoices by either creating a credit memo, using the Write Off Invoices tool, then creating the appropriate transaction, bill, vendor credit, or journal entry to zero the balance on a vendor account before you deactivate the name. You can find out more about the Write Off Invoices tool in the Writing Off Invoices lesson. If you inactivate a vendor that has an open balance, QuickBooks Online creates a vendor credit for the amount of the open payable and posts it to miscellaneous expense. To control the posting account, you should create a vendor credit before you make the vendor inactive. Summing up. Learning outcomes. Well done. In this lesson, we covered reviewing and troubleshooting QuickBooks Online lists. Knowledge recap. You can now work with your clients to identify and fix errors they may have made when setting up or mapping their lists. Next steps. In the next lesson, we'll look at troubleshooting accounts on the balance sheet.